Today I'm going to talk about traded endowment policies or second-hand policies, what exactly are TEPs, and who might find TEPs useful and attractive. This video is brought to you by Test Capital, and I have tied up with them to bring my readers and viewers a very attractive promo, so watch to the end of the video to find out more. Now, I've talked quite a fair bit about the downsides of long-term savings policies. They have high distribution costs, they tend to have low returns over the years, yada yada. And some people still want to have a savings policy because they feel safer with a big name insurer, they want a stable returns, and there are people who lose sleep when their investments go down even by a little bit, and therefore they want a savings policy. Now, I hear these concerns. In fact, my mom is someone like that. My relatives, some of them, they are also like this, and therefore a savings policy might really just be more suitable for them. But before you run out to buy a policy for yourself or for them, right, hear me out, there's something that's much more compelling than a savings policy. You can actually buy a second-hand savings policy or a traded endowment policy. Now, when we hear the term second-hand, it tends to bring about negative connotations. We talk about second-hand phone and second-hand clothing. Those are things that make us feel a bit weirded out. But trust me, when it comes to a savings policy, second-hand is good. Firstly, such second-hand savings policies are policies that people sell for a variety of reasons. Perhaps they can't keep up with the premium payment anymore, or they wish to use the money towards other opportunities or investments. When they sell their policies, they will get a higher amount than they would if they were to surrender the policy directly with the insurance company. And I've talked about this in my previous video, so go check that out if you're interested. This video is about the other side of the story to what happens to these policies when they are sold. So why is buying a second-hand savings policy better? The number one reason is your returns will tend to be better than if you were to buy it directly from an insurance agent or an insurance company. One of the reasons why savings policies are such a bad deal is because of the high upfront distribution costs incurred when you buy the policy. And when you buy a savings policy that's second-hand, this is what happens instead. For this policy, the original policy holder has already paid more than $14,000 in premiums because it's 4 years of $3,596. But someone who buys it now will pay $12,016. This can defray most or even all of the distribution costs. This means that your returns will be better than buying a similar policy from the insurance company directly. See how second-hand works for you here? As you can see, the projected returns of traded endowment policies can be significantly more attractive than buying directly from the insurance company. The second reason why TEPs are better than savings policies bought directly from agents is because you can choose TEPs with shorter tenures. Now, if you go up to an agent and say you want to save a fixed amount every year, the shortest tenure for such policies tend to be about 10 years, whereas TEPs can be as short as 6 to even 4 years. Also, since these policies have been around for some time, they have built up guaranteed cash values over the years and can therefore give investors a better peace of mind, especially if you have a shorter time horizon for your investment. One of the downsides I mentioned about long-term savings plans is that the tenure is just too long-term. In the long term, investments tend to go up, so you would rather invest than to lock up your money in a savings plan. In the shorter term, however, investments can be very volatile, and therefore TEPs may be a good place to set aside some savings for shorter time horizons, and if you have a lower appetite for volatility. The third reason why you should consider TEPs is because they're really convenient to buy. You can just take a look at Test's very extensive list of policies, more than 250 policies, which is the largest list in Singapore, and select something that you find suitable for yourself. Now, imagine going to an insurance agent and asking him or her to generate different quotations of different tenures of different amounts. It's just going to take the entire day. Whereas for Test, you can just look at their list, select something you like, and then buy it if you wish. Now, the application process is also really simple. There's no medical underwriting because the policy has already been issued. There's no lengthy insurance application forms to fill out. All you need to do is just tell Test which policy you want to buy, and then just pay up because they will actually prepare the forms for you. All you need to do is sign and make payment for your policy. Now, if you wish to get a traded endowment policy, Test Capital has offered a very attractive promo for my viewers and readers. Look at the description box for more details. Another really interesting benefit of buying a traded endowment policy is that if you buy the policy and the original life assured passes away, you actually get the death payout. Now, you obviously shouldn't count on this to happen, but if it does happen, it's actually a nice bonus because you get the death benefit even before your maturity date. And yeah, you have actually profited from that. Now, earning money from someone's death may sound quite morbid, but hey, you bought the policy and all the associated rights to it, right? When you buy a traded endowment policy, all the rights, including the death benefit, are signed over to you, and therefore you get the payout if the life assured passes away. So this scenario will actually skyrocket your returns on your traded endowment policy because you do not need to wait for the maturity date to happen, and you get a lump sum payout immediately. And that's a really nice bonus if it does happen. Don't count on it, but this is something that is quite unique to traded endowment policies. So if you are someone who really want to buy a savings policy, I'm sure you are now convinced that buying a second-hand one is much better than buying it directly from your insurance agent. Now, as much as you like your insurance agent and want to give him a lot of commission, I'm sure you agree with me that all these benefits are much better than supporting your insurance agent. So head over to Test Capital website for the full terms and conditions, as well as a list of policies that are available for purchase. Now, if you have any questions, please leave them below and I'll reply if I know the answer. And if I don't, I will check with Test Capital, so your answer will come from the horse's mouth. Now, if you like my content, do drop me a like as well, subscribe to my Telegram group, and I'll see you next video.